A warm welcome to the participants of today's webinar. Over the next 1 hour, we do have a packed agenda covering the GCC market and trends from multiple viewpoints. We'll start off with the GCC market, its evolution and substantial growth trajectory. Post that, we'll do a bit of a double click into the setup-related evolving trends of the market. Once that's done, we'll look into some elements of GCC transformation so that long-term value is created, because just setting up a GCC isn't enough. We'll top all of that with some critical learnings and action items, right, for the participants to consider, and eventually get into some Q&A before closure of the webinar. If you move to the next page, I'll start off with some numbers which depict how the GCC market continues to grow at an explosive pace. I won't go through each one, but let me just pinpoint on three. Just in 2023 and 2024, about over 650 GCCs were set up in offshore and nearshore locations. That's one. That's a huge number. The 2021 to 2024 GCC headcount cumulative aggregated growth rate, or CAGR, was 12.5%. And 60% of the new in-house centers are set up by first-time adopters, right? So this, combined with some of the other numbers, actually brings to fore that this is not a passing fad. This is not a one-time activity. This market is here for the big numbers. Now, we do have some more details in the subsequent page. If you could move there. So one of the things which we also want to be clear on is that this growth isn't restricted to just a few geographies or a few sectors. This is quite secular, and I'll request Akshay to throw a bit more light onto that. Akshay?
Thank you, Abhishek. As you mentioned, this is not limited by sector or location, right? So if you talk about setup geography, India continues to see a lot of traction, right? Pretty much dominant, but we also on the same time see a lot of activity in nearshore Europe, right? We see activity in Philippines, we see activity in Latin America as well. If you think from an industry vertical standpoint, right? TMT, of course, has been the dominant vertical in the past few years, followed by manufacturing, retail, consumer goods, and some of the others. So truly, this is pretty secular. This is pretty well spread out. I mean, we have not covered this here, but even if you think from a headquarter geography perspective, we see companies within North America, of course, getting on the bandwagon, but we are starting to see a lot of interest in Europe. We're starting to see interest in Asia Pacific, including Japan as well, right? So net of it, what we expect the market to continue to grow across all the vectors, right? Whether it is geography, whether vertical, or even client geography, right? Now, when we move on, right, and we talk about, the kind of functions, right, and here, this is where the rubber kind of meets the road. What GCCs actually do today, I mean, the breadth is absolutely staggering. In addition to core IT services like infra, applications, we see mature delivery in, legal, marketing, supply chain, procurement, human resources, right? This essentially tells you how the functions are progressing within a GCC model, right? And of course, as I said, some of these are well established, so a finance or a human resources or a marketing. But we are seeing emerging functions as well: real estate, corporate communications, legal, right? Now, the key takeaway, right? Enterprises are constantly experimenting with new value streams in GCCs. Over time, as internal confidence grows, even niche or sensitive functions are being brought in. And this is creating opportunities for both process innovation as well as integration. So now, what does all of this mean, right? Looking forward, we expect that the momentum will continue to be there. The market, the value of work which is being delivered out of GCCs is expected to grow from $100 billion to $150 billion in the next 3 years, growing at a pretty fast 15% CAGR. I mean, much faster than some of the other segments. At the same time, we expect the headcount within nearshore offshore to increase from the current 2.8 million to almost 4 million, right? Now, this growth rate, which you see here, the 15% or the 12% on the headcount perspective, reflects 4 things. It talks about need for large-scale, cost-effective talent. It talks about desire for control, especially in some of these digital data, some of these domains. It talks about increasing integration of GCCs into core operations. And then essentially it is also driven by lower setup friction. I mean, there are now established playbooks, advisory models which are available in the market, right? So it is not essentially just scale. It is smarter, faster, and strategic scale. And which brings us to our GBS in one page. Rohit, you want?
Hey, thanks, Akshay. This doesn't fit very well into the flow of the discussion. If you feel that in the next 60 minutes, let me acknowledge that upfront. But this is a GBS GCC geek who spent some time with a couple of other colleagues, and we thought there are just too many pieces of information and different dimensions to this model, given how comprehensive and strategic it is, that everybody wants to have basic understanding of, to understand what the global business services and the global capability center model means in a nutshell, and what started as a fun project eventually translated into a few hours of brainstorming and then some really boring back-end work, but translating into something really interactive. So I invite everyone who's listening in today to use the QR code. It will also be included in the slides that you get after the webinar, and access this interactive online tool, which provides you with a lot of facts, data points, perspectives, and frameworks on the GBS model. For those who are members of our GBS research, you will get a interactive but downloadable version in the coming days. But everybody else can still access the online tool without any charges. So go ahead and play around with it and explore more details about the model.
All right. Thanks, Akshay and Rohit. So in the first section, we've spoken about the GCC market evolution, right, and various aspects of its growth. Let's now look a bit under the hood, right, into the details, peel the onion a bit as we may, about various GCC setup models and their emerging trends. So on the next page with that, let me hand over to Rohitashwa again to drive through some of the details. Rohit?
Thanks, Abhishek. So back to add more substance this time. But jokes apart, we are very regularly in conversations where we are tracking hundreds of GBS that get set up every year. And very often, my clients are asking me, everybody has a GBS now, everybody has a GCC now, right? Especially in offshore locations, everybody has a GCC. So what's more to be done there? And yes, we saw about 500 plus new centers, GCCs last year. But if you look at the data, just for global 2000 organizations, 65% of them still do not have an in-house GCC in an offshore market. Only 35% of them have that. No doubt, India is the most dominating location, having almost 3/4 of all of these organizations present. We expect this trend to continue, and about 15 to 25% of these 65% non-adopters to jump in and have some sort of GCC in offshore locations, many of them in India. Akshay earlier spoke about a lot of reasons why this has become much more strategic. As you can see in the data in the bottom half, the adoption levels are different across industries. Technology, communication, healthcare, life sciences have more aggressive adoption as compared to some others. This also ties in well with the new setup trends that we are noticing. So all the industries which have a greater share of yellow, we are seeing a lot of new adoption coming in from those industries. And the opportunity is not limited to the global 2000 companies, by the way. We are increasingly seeing a lot of small and middle scale companies, even companies that do not necessarily have a global footprint, but are more focused on a European market, Australian market, or North American market, exploring this model, as this has truly become a global talent play versus an arbitrage play. So we expect the overall number of new setups to be much greater than just this additional Global 2000 companies jumping in. That said, the numbers make it look like as if this has become very easy, despite almost a 4-decade, maturity in the model. There are still some structural gaps, challenges that every company has to grapple with as they try to set some of this up. So, Akshay, you have been supporting a lot of our clients in their setup journeys. Will be great to hear what are some of these gaps that you see.
Sure, right. And you raise a very interesting question, right, Abhishek and you. Uh, if so many enterprises see so much value in GCCs, why haven't they already made the move, right? Um, multiple reasons, and it stems across both strategic or structural reasons, and then there are some gaps in their execution. So, for example, some companies or some enterprises still operate very federated models, right? So there is no central mandate, which kind of pushes back their ability to, set up a new GCC. Others have had bad past experience, or some of them just lack the executive mandate, right? Again, the executive mandate to pursue both offshoring as well as creating their own in-house centers, right? On the execution side, you'll see very tactical gaps, right? And we have seen these impact some of these journeys. So there are gaps, right? They don't know how to transition work. They don't know about, let's say, India. They don't know how should they be paying their employees. So there is very weak local knowledge. Uh, Talent acquisition struggles is also one thing which you've seen, right? Some companies don't really have a brand in, let's say, if they want to move to an India or a Philippines or a Poland, and talent acquisition becomes a very big problem. Some firms, in fact, in our view, right, they even struggle to create a business case. I mean, there are a lot of companies which are creating business case purely from an offshore to offshore transition, which is hardly a creative, or even if it is a creative, it's a very low number, right? That being said, the key thing to understand is most of these challenges are solvable, but you need to acknowledge them early, and tackle with the right setup strategy, right? So, what does that mean? Uh, and how are companies getting past these roadblocks, right? Uh, Increasingly, they are turning to external advisors and provider-led models, right? Even the ecosystem today is becoming much more mature. Enterprises have now much easier access to playbooks, expertise, right? And I mean, and Abhishek can add more, but essentially we are seeing support being provided across different mandates. Yeah, Abhishek.
Thanks, Akshay. Yeah, thanks, Akshay. This is super interesting because I've been in the industry for about 22 years, and from a worldview where GCCs and providers used to compete, especially during setup, hey, one will take business away from the other. Things have come to a very different shape today, right? And this can take multiple angles or views, even within the advisory space, right? I'm not even talking about some of the others. So, there could be things related to an objective selection, of a BOT or assisted captive provider, right? And getting into the right commercial model with them, right? Which firms like ours and a few others work with enterprises on. But there's also so many other advisory elements related to design of the GCC, operating model, permutations and combinations around this. So there's really no standard approach. There's different kinds of firms, different kinds of advisory and other firms which are actually available. So I see this actually as a very strong, broad ecosystem of help which enterprises can get to accelerate their GCC journeys. Now, again, there are pitfalls and things to be navigated around, but it's definitely much more options as compared to the classical de novo setup, right? Now, as we're talking about some of these, especially the setup models, on the next page, I know that Rohitashwa has some interesting statistics on the type of setup models prevalent. So let's get into that.
Sorry for coming off mute late, but thanks, Abhishek. What I would say is that what we have seen is, as you will clearly see from the first chart, the the number of provider assisted setups versus pure independent in-house setups has increased a lot. But I would also request Ravneet to talk through some of this data in more granularity, as she has been kind of tracking this more extensively. So Ravneet, can you talk through us, where exactly are companies taking provider assistance?
Yes, great. Thanks, Rohit. So, it's very fascinating to see how service providers have actually evolved and widen their offerings and engagement models to tap into the dynamic GCC market. How Abhishek and Akshay talked about different providers coming in, supporting across the entire life cycle of setting up a GCC. Now, this shift has had a significant impact on the market. In fact, what we see is that over the last 5 years, nearly half of all setups that have happened have been in a provider-assisted model. Now, this compared to what it was for the previous 5-year period is a significant jump where close to only 1 in 4 GCCs were being set up by providers. Now, obviously, this rise is being driven by a few key factors, from accelerated speed to market, from reduced upfront financial commitments, and easier access to local expertise and know-how, as well as, a more smoother setup and management process. These benefits are now proving to be too valuable for enterprises to ignore. What's more interesting is how the type of provider engagement model has evolved. The BOT model, or the build, operate, transfer model, which was once, a niche approach, and we saw only around 5 to 10% setups happening back in 2015, 2020, is now one of the preferred model for most enterprises. In the first quarter of this year itself, we've seen 2 high-profile BOT deals making headlines. Tech Mahindra supported Goodyear in setting up their GCC in Hyderabad, and Lufthansa is partnering with Infosys to set up their new center in Bengaluru. And these are just isolated deals. They signal towards a much broader industry shift towards more collaborative and outcome-driven models, where providers don't just enable the setup, but actively co-create and scale the operations. However, if we move to the next slide, and it is very important that we choose the right provider partner. It is absolutely critical to ensure a smooth and successful provider-assisted GCC setup. And when I say the right partner, I am not referring to the largest one or the one with the lowest cost. We bring out some aspects, we feel are essential for us to find the right provider. And for us, in our opinion, it starts with their experience and capabilities. You want a partner who has a proven track record, someone who's delivered operational excellence and created sustainable value in similar engagements. And just as important is their domain and vertical expertise. Do they truly understand your industry? Does their experience align with what your business needs are? In our opinion, the next checkpoint is on talent. So does the provider partner have access to the right talent pool across leadership, middle management, and frontline operations? Now, this human element, though is often overlooked, is actually very essential for your long-term success. Abhishek, do you feel what other parameters are important in finding the right provider partner?
No, thanks, Ravneet. You've covered some fairly important ones. The next one which comes to mind is transition, right? Because throughout any, whether it's an assisted captive or a BOT or any kind of a support, there's significant transition of work happening potentially from multiple sites. There's something from vendors, there's something from, incumbency within internal teams, there could be contractors. So just the provider having the capability to develop those structured and contextualized transition plans is critical. The other one is, as you can understand, operations, right? Especially when it comes to build, operate, transfer. We've often seen that people would focus on, hey, can you support with the build, and then when will the transfer happen? Hey, there's also, perhaps anywhere between 12, 18, 24, or even more months of operate. So does the provider have the right physical, technological ecosystem, to ramp up, get the delivery in place, get the delivery stabilized as per the agreed metrics? That's another question to ponder. And then finally, if there's one thing which has been very consistent in all the engagements we've been part of, right, where clients are selecting vendors to assist with the GCC setup journey, are there enough flexible engagement, commercial exit models which align with the needs of the business? Because let's not forget, the priorities of the organization could change, right? GCC setup is a relatively long process. It doesn't happen overnight or in a couple of months. Things could change. So one of the benefits of a provider-assisted model is to say that if things or priorities were to change middle of the process in situ, can the provider step in, of course, for a cost, to make sure that nothing is just left in the lurch? So these are some of the angles which are very important while choosing the right provider partner. And in summary, I'll say just the standard rules which apply for a typical sourcing process generally do not apply in a provider-assisted GCC setup. All right, let's move to the next page. So we've talked about the evolving models and trends for setups, but like I said, setup is just one part of the game, right? Let's look beyond the setup stage, especially around GCC transformation for long-term sustainability, because there's tons and tons of stuff happening here. And before we get into some of the details, if you move to the next page, right? I want to start off with one thing, right? We've spoken a lot about the benefits of provider-assisted GCC setup, the activity. Let's be honest that not every GCC will succeed, right? Okay. 100% success rate has not happened in the past, is unlikely to happen in the future, variety of reasons. Akshay, this begs a question to you. What are some of the topmost reasons that we've seen GCCs fail?
Thank you, Abhishek. This is a very pertinent question, right? I mean, we all spoke about setups, and the question is, even after successful setup, many GCCs struggle to sustain momentum, right? Why some GCCs fail? And we'll also, as part of this, we'll talk about how they can actually use transformation strategically to, avoid this, right? Again, key points which drive failure include, lack of parent buy-in, unviable business case, operational silos, cost pressures, challenges infrastructure, right? These often emerge when the GCC remains in a support mode without evolving, right? Again, the good news, these can be solved, but you of course need a structured transformation journey. You need to expand the scope, you need to embed innovation, and you need to align yourself with the enterprise strategy, right? And that's where we are heading next. Rohit, so we have done a lot of work around maturity and how we see a life cycle of a GCC or a GBS. Could you please throw some light around it?
Yeah, thanks, Akshay. And I'll actually start by addressing a couple of questions that I was looking in the Q&A. We have a lot of questions. We'll try to get to them, but a couple of them that may help at this stage. One, what Abhishek mentioned earlier, that GCC setup doesn't happen overnight. So a lot of times it starts with an executive mandate, keeping some things in mind. But then because of changes in the business circumstances, changes in the macroeconomic circumstances, changes in the executive leadership, or a realization that the mandate was provided in some context and now that context has changed or evolved, there can be many reasons why GCC can feel eventually they lose the mandate, and that creates a bit of a problem. Also, we are using the terms GCC and GBS through this conversation. So the short, answer to the difference between the two is that global business services is a delivery construct. It's a model that companies use to structure the way they source global services. It is not purely captive-driven model. It can have a lot of outsourcing play as well. And GCCs are the centers, which are typically in-house centers. So they are owned and operated by the company. But then there are all these hybrid models. We've been talking about the BOT model a lot, where they use provider help in the beginning stages or even later on for different purposes, but still largely owned and operated by the company for good part for GCCs, right? So one is about the model, other is about the center. Now coming to the evolution, the transformation that we've been talking about. So I remember about 40 years ago when some of the initial GCCs, as we call them now, were being set up in India. The satellite at the top or the dish antenna at the top of the offices were transported in bullock carts in Bangalore. There are some pictures, that I have seen from that time. For many, many initial years, GCC meant arbitrage, cost takeout. That was the basic business case, and that was the end of it. It has progressed significantly to a service provider consolidator model where GCCs have become stable, reliable partners delivering services at scale. And as that happens, the value delivered on top of the arbitrage benefits, the cost delta between a high cost and a low cost location starts to vary. But where we have seen the real capability unlock is stages 4 and 5 in our persona framework. And that is where when companies get to the transformer or integrator stage of operating a GCC, they focus on niche capabilities. They focus on end-to-end accountability and then they start not to deliver a task or a process or parts of function, but to impact key priorities, new business development, new market entry, transformation, innovation. And that's where truly the needle shifts to deliver more value. If you could flip back to slide number 19, our research shows that GCCs that have moved to stages 4 and 5 have delivered up to 1.6 to 2x impact of the arbitrage, which is pretty significant delta and something that we believe is critical to ensuring the sustainable business case for the GCC model. Because once arbitrage is baked into the financial planning, additional value has to come from somewhere to continue investing in the model. We have an offer for everybody who is attending the webinar today. So everybody who represents a GCC or a broader GBS organization, you are all invited to request for a complimentary maturity or persona assessment of your GCC organization. This offer is only valid for those who represent a GCC or GBS or manage it for their company. You can use the link that is in the chat to access this online tool, and we will do that light assessment for you on complimentary basis, and then schedule a call to walk you through and discuss the so what implications about your results. We have done this assessment for hundreds of clients, so we will benchmark you against a rich depository of data, aligning with benchmarks within the context of your organization, the age of your organization, the industry, the kind of work you do, and accordingly highlight that what can be the ambition of the value that you may want to create in near future for your company. With that, I'll shift gears, and we have been speaking for quite a while, and let's see how many of our attendees are still listening in attentively. So a quick poll question to warm your fingers, and we want to ask you, how would you describe your GCC's current role and maturity? I can see some answers are already starting to come in, so I'll not go through each of the options, but I'll probably give it another 10 seconds as the results are quickly populating. I see we have a large number of responses, and while we wait for the poll to more people to respond, Ravneet, if I may ask you, as you can see from the answers, there's not a lot of clear difference. Yes, we can say which option is getting the most, response, which is getting the least, but still they're pretty much, closer to 20% each, give or take 5 points. How do you respond to that?
It's very fascinating to see that within our attendees today, we have an entire range of how different enterprise or GCC leaders are seeing their GCCs. And like you rightly said, a good 20% of each is across the 5 levels or personas that we discussed. But if I look at it more closely, what comes out to me more clearly is that still a good 60% of the chunk is dedicated on the first 3 phases only, and there is about lesser number of enterprises or GCCs that have actually been able to reach the 4th and 5th level of evolution of the GCCs. And this is very interesting because, there are a lot of benefits that come with GCC transformation. And if we move to the next slide, GCC transformation brings speed, it brings scale, it brings innovation. The reality is that the path for this transformation is really straightforward. And probably that is the reason even today, a good 40 to 60% of our participant GCC leaders are still at phase 1, 2, and 3 of their GCC journey. Now, what are these challenges? What are these things that are holding organization back? We believe, again, this can be split on 2 things. We often see a lot of structural challenges holding organization back. Things like lack of vision and strategic alignment, limited budget, and insufficient executive sponsorship can stall momentum right at the very start. On the GCC side as well, transformation can be hampered by limited technical expertise, inadequate access to modern technologies, and the absence of a globally integrated delivery model. Now, these gaps create major operational roadblocks. I'll in fact share a real world example. We were having a conversation recently with a global pharma company which has an established GCC network across the globe. Now, the leadership shared that despite a mandate to transform their GCCs for nearly 2 years, they had seen minimal efficiency gains. We dug deeper, we tried to understand what the possible reason was, and our assessment showed that the real issue was actually a more fragmented and siloed operating model. So, in fact, the global delivery model was not integrated across the geographies. Now, without standardization, we realize scaling transformation is nearly impossible. And this is not an isolated case. This usually comes up in our conversations. We're not able to find the right technical expertise, we do not have access to modern technologies. Around 67% of GCCs that we've recently talked to believe that they have not actually meaningfully standardized their processes. Less than 50% have actually embedded the digital capabilities with the intent to transform. So clearly, while there is an ambition to reach the level 4 and 5, there is a gap in what we see at the execution level. As we move to the next slide, while the challenges to transform are real and multidimensional, I want to say the path forward lies in getting your fundamentals right. And that begins by aligning what we call the power trio of talent, technology, and throughput. And these need to be in seamless harmony and not in silos. I'll start with talent. Now, talent is the very heart of your transformation. A high performance, innovation driven culture is what drives transformation. But culture alone is not enough. You need fit for purpose skills, you need an alignment with your parent, and you need a strong employer branding so you can attract and retain the right talent. Without these, it's impossible to build a team that is actually capable of driving the real change. The second pillar that we talk about is technology. Now, technology is the enabler. A digital first mindset, coupled with all your infrastructure and API led architecture, creates the very foundation for agility and scale, which is the base for a transformation. And by integrating AI, ML, and intelligent automation, GCCs can unlock predictive insights and deliver more value to the business, reaching level 4 and 5 of the GBS personas. Finally, the third pillar is what we call throughput, which is often the unsung hero. This is where transformation becomes operational. You standardize your processes, you bring in cost efficiencies, you bring in cross-function integration to ensure that transformation is not just a vision, but a measurable and repeatable outcome. Our experience shows that when any one of these three pillars is missing or underinvested, the transformation effort can risk falling short. But when talent, technology, and throughput work in sync, that's when GCCs truly deliver strategic impact. And this brings us a full circle. As we move to the next slide, just as enterprises are turning to providers to assist with GCC setups, we are now seeing a growing reliance on them to drive transformation success as well. In a recent survey we conducted with over 200 enterprise and GCC leaders, and we set out to understand how this provider-enterprise relationship is evolving, and the results were telling. Across the entire life cycle of GCC, from setup to scaling to transformation and even sunset, leaders are increasingly leaning on external partners for strategic support. But where is it that we saw the strongest sentiment was actually transformation? Transformation is where about 67% of the leaders that we connected with indicated a clear preference to collaborate with providers in driving their GCC transformation agenda. The takeaway is really simple. It's time to move beyond the traditional DIY model. The future, as we see, is hybrid, where providers are not just executors, but enablers of transformation and long-term value creations. Akshay, what are your thoughts on this?
No, interesting points, Ravneet. And as we see this, it would be interesting to see what the audience believes, right? Again, so we have another poll for our enterprise GCC stakeholders. Very simple question, but important one. How extensively have you partnered with providers on your GCC journey, right? Again, simple examples. You haven't, you're considering it, you've done it for setup, initial operations, you are taking their support for managed services, and of course, across multiple mandates. Our experience tells us that enterprises and GCCs or GBS organizations, if I may use the term as well, they're much more open to partnering with providers now. A lot of them have realized that they can strategically leverage providers to drive growth. Now, again, similar to last question, interesting to see that the audience here is more towards either they have not done it, which is or they have planning to do it in future, or they have done it for some setup build support, right? We just give maybe 10-15 more seconds for this poll to close, and then we can see what the results are. Yeah, so interesting, right? I mean, we see a good portion focused primarily either on support for setup or for some bit for managed services staff augmentation. Again, that is something which we have been seeing for the past, decades now, where providers have been supporting, right? Now, this brings us to an interesting point. What we have been speaking till now is about how enterprises are evolving, how they are changing their behavior. And we see providers responding, right? I mean, we see them evolve as well. The GCC focused provider market is expected to double in the next 3 years, right? And it will reach roughly $40 billion. Providers, as we discussed, are investing in multiple areas. So, of course, helping enterprises in setup is one of them. Helping them in their operate phase, right? Helping keep the lights on is one more. And one of the bigger areas where we see a lot of growth in the future is essentially helping these GCCs or GBS organizations transform in the future, right? This evolution in the broader ecosystem signals how strategic GCCs has become for providers. And it also tells you that how much more support is now available for enterprises who are actually seeking support to transform or scale their centers, right? Ravneet, let's talk about a real life case study, right? About how, and this is based on our experience, how this BFSI firm actually transformed its India GCC from a transactional technology based center into a digital hub, right? Why don't you shed more light on this?
Thanks, Akshay. So, let me just talk about this. So about 2 years back, there was a leading global BFSI player who had set out to transform its India-based IT GCCs. The center for very long, for almost 15 years, had been stuck in delivering only transactional capacity, and over time, its performance has actually started to slip. So concerns like legacy infrastructure, fragmented data, and obviously the lack of digital capabilities was plaguing its growth. Now, these challenges were not only stalling its innovation, but also impacting decision-making, operational efficiencies. And they sought to, turn things around, and efforts were done internally. However, the intended results were not achieved. And that's when they decided to bring in a leading global IT service provider, which was a strategic move to co-create and execute a digital-first transformation agenda. The provider came in with a three-levered transformation blueprint, which focused on cloud migration, automation, and the development of a centralized data architecture to break down the silos and improve access to insights. And the results, well, they were nothing short of impressive. There was a 30% improvement in their IT operational efficiencies. They saw a 40% reduction in their processing time, which saved them about 25,000 FTRs annually. What was most striking was actually the outcomes far exceeded the enterprise initial expectations, proving once again that the value of a right provider partnership in driving meaningful transformation. Now, all throughout this discussion, we've been harping about the right partner, be it setups or be it transformation. And this example reiterates that choosing the right provider partner can actually be the deciding factor between the success and failure of any GCC transformation. And again, it's not just about credentials or scale, it's about fit, foresight, and follow through, which we believe are the three critical pillars that truly define a successful provider enterprise collaboration. Akshay, what are your thoughts on these three pillars?
You're right. You need to look beyond technical expertise. You need to look for transformation. You need alignment on vision. You need alignment on capability, execution, resiliency. You need to partner with someone who's future focused, has a transformation mindset, right? Deep domain innovation capabilities, and who can help you in scale scaling your operations in a risk-averse model, right? So again, net of it, look beyond the actual only technical skills, but also see some of these other pillars, and that will help you find the right partner, right? Now this brings us to another offer for today. Ravneet, you want to talk about it?
Sure, thanks, Akshay. So, we've talked about how critical a right partner is to success of any GCC transformation or setup. And it's no surprise that providers are actually expanding their landscape are evolving it rapidly to ensure that they are able to cater the needs of GCCs. We are seeing an increasing interest, not just from your traditional providers, but also from a new wave of players bringing in specialized capabilities in automation, AI, and domain-led transformation. So at Everest Group, we're launching 2 peak matrix assessments during this year to evaluate provider capabilities in GCC transformation and GCC setups in India. These these assessments are focused on for providers, and they're designed to help providers showcase their strengths as well as user results as credible market-facing assets. So if you're a provider who's looking to participate and gain visibility in this fast-growing space, we invite you to opt via the call to action link on your screens. Our team will then get in touch with you to help you guide through the next steps.
All right, thanks, Ravneet. We are now down to the last section, and a fairly concise one because we want to get to the Q&A very quickly. So we'll recap some of the critical learnings and go forward actions for success in this space. So if we move to the next page, I'll just cover 4 things. Yeah. Okay. GCCs are truly defining the global services industry, right? And it's time to embrace the shift. As I mentioned, I've been in the industry for over 2 decades, and I've seen the pendulum swing towards the outsourcing side many times, but never as significant as this, right? And we've shared the numbers and the trends to back that up. Point number 2, the GCC has to be seen as a strategic partner. In fact, many enterprises operate it like another office with regular leadership visits and a seat at the table. And that's what really leads to the whole transformation agenda that we've spoken about. So transform or perish is the keyword. Very important. Point number 3, the troika of T's, as I call it, talent, technology, and throughput. They truly underpin the GCC transformation, and they need to work in harmony. We've seen many cases where millions of dollars have invested in technology, but then no real thought has gone into the talent required to make the best use of it and get to throughput. And there could be multiple permutations, combinations. They need to work really in harmony. And finally, providers can help accelerate the value from GCC setup and transformation. The space has clearly matured over the past 5 odd years. Let's harness their strengths to drive impact. Now, before we get into the Q&A section, I know Rohit has something interesting to share about something upcoming in the next few months. Rohit?
Thanks, Abhishek. Something I'm super excited about. We have always been known for doing great research and providing a lot of interactive, value through workshops to our clients. But 2 years ago, we decided to fill a gap in the events industry in this space and create some really distinguished, high-quality, top executive conferences. We launched our inaugural event in Dallas last year and London earlier this year. And we got amazing feedback. So thanks for everyone who made that a success, including our clients. We'll be back again in September. You can see dates on the slide here. And we are expecting a top executive across global business services, sourcing, vendor management, procurement, and other shared services and IT stakeholder groups. A lot of different formats of conversation across the 2.5 day agenda. So I'll invite everybody to use the link below to explore more about this event and reach out to your Everest Group point of contact or any of the speakers today if you want more details. We'll be there. The agenda is shaping up really well already, and we look forward to seeing you there.
All right, thanks, Rohit. So we are now to the Q&A section. What we'll do is over the next few minutes, we'll cover a few questions which we've received through the webinar today or prior to that. So Rohit, since you were the one who was most recently speaking, let me start with a question which I think you'll be interested to answer, because one of the questions which came through was around how do mid-sized companies see value in GCCs? And this is interesting because there's many questions we get almost on a weekly basis around, hey, which sector is driving more? Their geographies, types of companies, size of companies. And mid-size, there's always a bit of a question mark around, how they see it. So any views on that?
No, that's a very pertinent question, Abhishek. And just to share some data from last 5 years before answering the specific question, we tracked about 1,500, if not more, new setups since 2020, since COVID. And almost more than 50% of them are mid-sized companies. So this model has truly come of age, where scale as an entry barrier has really reduced. And I would put it to many different reasons, but the top three will be the overall maturity of the industry, the maturity of the delivery model, technology model, where the human capital is at the core of it, but it's not just about volumes of low skilled resources, right, anymore. And thirdly, companies are not looking this as only cost play where they need volumes to justify business case. This is truly an investment in the talent hub for future. And many of these mid-sized companies are also looking at these GCCs as strategic hubs they want to establish in other markets. Of course, it does not come without challenges. Some of them were discussed today. But generally, because of the maturity of the industry, a lot of senior talent available to guide new companies on their journey, and then the provider in the captive model becoming much more integrated and feeding into each other's success versus pulling at each other. So all of that has made it possible for mid-sized companies to enter, scale, stabilize, and deliver a lot of value through the model.
Sure, thanks, Rohit. Another interesting one which came through was, what's the exam question on GCCs that large IT services providers must ask and answer? And I know, Akshay, we've often had that conversation, right, in various shapes and forms internally. But do you wanna share some points on that?
No, thank you, Abhishek. If I were to distill this down to a single question, right, it would be, can we as a provider shift from being a service provider to value co-creator in the GCC journey? It is no longer only about scale or cost arbitrage. The GCC customer today is far more mature and expects a partner who can bring domain, IP-led solutions, and transformation muscle, and not just transaction delivery, right? So for example, you should be asking, are we enabling enterprises to scale smarter and not just faster? Are we embedded in strategic transformation objectives and not just supporting delivery? Or are you supporting in co-creating capabilities, IP, assets, talent models, which can help drive GCC evolution, right? Again, like you see this entire wave of enterprises moving to set up GCCs, we see an entire wave of providers becoming more structured, more programmatic, hiring dedicated leaders, target GCC, right? But you'll have to move away from project fulfillment towards ownership of outcomes, and you have to act as a transformation accelerators to really drive value. And that according to me are the questions you should be asking yourself.
Thanks, Akshay. Now the next question is something which about a topic that I'm pretty passionate about, and it's basically, what are the watch outs for build, operate, transfer route to establishing a GCC? And I know we have 9 minutes remaining. This is a topic I can speak about 90 minutes about and still have a few points left, right? But let me just summarize, right? The most critical ones. So first off, I think lack of clear communication to potential bidders or vendors about the scope, tenure, how soon transfer occurs, right? Keeping everything open and subject to discussion will lead to unlimited discussions and iterations, which starts to become counterproductive. So there's got to be at least some strategic planning, thought process which goes into it before getting into a BOT selection or solutioning engagement. Point number 2 is underestimating the complexity of vendor selection for a BOT. This is, I think I mentioned earlier, also very different from as compared with a standard, IT or business professional services sourcing engagement, because there's so many moving parts. There's a lot of involvement from talent, specifically around culture, talent brand building, significant amounts of risk management, physical facilities, harmonization of ways of working, which is very different from an arm's length, outsourcing engagement. Point number 3, not having a solid internal program team, right? Yes, the vendor can come in and work wonders. They can help a lot. But then when it comes to the entire work of vendor selection, which also combines the whole solutioning process, thought process of what's really needed, the kind of services needed. If there are multiple pockets within the organization, just trying to do their own thing, it's highly unlikely that the value is going to be received. And then finally, rather than just focusing on highly operational metrics, in a BOT model, it's important to have program level metrics by phase, right, which have some degree of financial penalty associated with them, so that there's enough skin in the game for the vendor on actual things that matter and which impact customer experience, rather than just delivery of activities. So those are just a few watch outs. By no means are they comprehensive, but I hope they provide some view into what these should be. I'll take up another question, and maybe Ravneet or Akshay, one of you want to answer this. What happens long term to cost benefit at a GCC versus a global system integrator, right? Very common and very good question.
Yeah, and it's a age-old debate, right? I mean,
Yeah.
can you actually deliver work at a lower cost than a provider, or do GCCs truly have a higher cost compared to a provider, right? I mean, there's no right answer. In our experience, we have seen GCCs which, despite a provider stack having an SGN and a margin, we have seen GCCs which operate at a cost which is higher than that. But we have started to see examples wherein you have some of these large, mature, at-scale GCCs, which are, operating at almost similar cost, or maybe even slightly lower cost compared to a provider, right? And that is actually increasingly changing the dynamics, because now what essentially happens is there is this entire enterprise mindset of, why should I outsource some of these managed services work to a provider, and why can't I do that work in-house, right? So again, as I said, in general, no right answer. Both examples exist. I think generally, if you're thinking of purely cost from a GCC model perspective, it is not the right way. You have to think from a value perspective as well. You need to think from a control perspective as well. And at least that's what our perspective is on this topic.
And
Great.
Akshay, thanks for that last comment. Just jumping in here, because what I'll say is that cost is important. If GCC model was a single-legged table, that leg would be cost savings. I'll acknowledge that, but it is not, and that is where it has to be a multi-pronged value proposition. And if sometimes we have seen clients become too obsessed about cost only and lose the sight of why they decided to invest senior management bandwidth, a lot of internal resources in creating an internal capability in the first place. So I think thanks for saying that, what you said at the end, that it has to orient towards value without losing the sight of cost. But otherwise, I think outsource any day if cost is the only thing they would care about.
Yeah, and I'll just quip 15 seconds here, Rohit. Back in 2005, 2006, I still remember there used to be many cases where the firm I used to work for, we used to have these models where GCC could be, significantly higher than outsourced operations, but because of just the level of infrastructure and furniture and everything brought in from global offices, I think a lot has changed. But then again, to your point, it's all about value, right? But we can't lose sight of cost. All right. So one thing has been missing in all the questions we've covered till now, and because we are in 2025, how can we miss that? AI, agentic AI, how is that changing the future of GCC workforce? So Rohit, I know you're quite passionate about this topic. Take it on.
And then Abhishek, I might give you longer answer than you anticipated. But just to quote two data points from our research, about 70% plus CFOs are happy with their finance organizations. But when we analyzed 800 plus finance shared services leaders who run a lot of GCCs in finance or finance function in larger GCCs, more than 67% of them had not standardized the process to a satisfactory level across the stack. That underscores the situation here. Does AI, agentic, the next technology that will come in, do they have potential? Absolutely agree. I think the services industry is going to look very different in the next decade, right? However, it is not happening today. So all these problems that still persist, value on the table that has been left, they now provide a little bit of runway to get the house in order and standardized the people practices, the process, the technology. But we believe that the overall dependence on human capital will shift significantly. Lower volumes, greater value. We have seen some companies make that change proactively, and they will stay ahead of the curve. But for those who are not disrupting themselves, then there will be, an external force, largely the third-party service providers who are pouring in millions, if not billions, into investing into creating capabilities to transform different functions and different technology and operation stacks. So I think GCCs have an opportunity to jump into it in the right manner, build right external partnerships as needed to solve there's this problem before the enterprise decides to solve it differently.
Sure, sounds good. Thanks, Rohit, Ravneet, and Akshay. I know we're close to the top of the hour. There's just a couple of more pages which maybe we'll just take a few seconds. On the next page, you can see some blogs, which Akshay, if you could move to the next page. Yeah, some of the recent blogs. You can just go through them on the GCC landscape, and then we also have a few links to some related content which is available on our research portal. With that, before I hand it back to the moderator, thank you so much for joining in, and wish you a great rest of the day, evening, or night.